My name is Nahashon Mungai. I'm the Executive Director for Global Markets at Standard Investment Bank. Within SIB, I run the Global Markets Division. This is a buy side of the business, and I'll explain what that means shortly. At the buy side of the business, where I run discretionary funds. The one that's most well known is a Mansa-X fund, and I think that's the one we'll be discussing mostly tonight. I joined the SIB from commercial banking, actually. Before I joined SIB, I worked for various banks, but mostly in trading capacities in the treasury departments of I&M Bank, Equity Bank, KCB, and Bank of Africa before I left, where I was the head of treasury. So in my capacity in those commercial banks, it was really just fund management, but in a very different angle from how you might know it. It's really what happens within banks is that traders actually trade the deposits that that clients put in their accounts. Traders are actually the ones that actually trade those funds, and that used to be my role for about 6 years before I joined SIB. So I joined SIB to give opportunities to investors to access markets that were not before exposed to investors in the Kenyan space.
Yes, and what's SIB's core business model, and what are some of the services you offer the institution?
So SIB is an investment bank. So just to explain, an investment bank is different from a commercial bank in the sense that an investment bank that does not take clients' deposits like a bank does, because a bank takes clients' deposits in order to on-lend them as loans, and the margin of how much they pay their depositors versus how much they lend is actually how they make a return, or that's how they make a profit. Investment banks operate in the capital market space, meaning that we enable our investors to participate in stock markets, fixed income markets. So fixed income refers to the buying and selling of bonds, treasury bonds, bills, and so on. And also investment banks primarily, although this was not happening for a very long time in Kenya, enable investors to have access to financial advice, advising them in terms of how to manage their wealth, what you call wealth management and advisory. So investment banks help retail investors to participate in capital markets, but they also help businesses in capital raising. So if you're looking at companies, if you're a company and you're looking to raise money by, say, listing on a stock market, investment banks such as Standard Investment Banks will enable you to do that.
All right. And what differentiates you from the other investment banks in the market in terms of value proposition to clients?
Standard Investment Bank was founded in 1995. And it's a fully indigenous investment bank. So we've been around for a while, over 30 years now. And we started as a stockbroker. So for a very long time in Kenya, we did not have a very big differentiator between an investment bank and a stockbroker. And I'll explain what this means. For in the stock brokerage business, it means Mokaya comes to buy Equity Bank stock. So when you buy Equity Bank stock, then you come and buy it through, say, SIB. And then we will help you to buy this stock. We will place the order for you, and when you buy, we'll earn a commission on that trade. So typically around 2%. So for a very long time, that's what investment banks in Kenya did. And the trouble with that is we did not really do, as an industry, that is, we did not really help investors with managing their wealth. Because if you buy an Equity Bank stock and it doesn't perform well, that's up to you. We don't really do the job of advising you on whether it's the right stock to buy or whether it fits your portfolio and so on. So around 2016, the board of SIB sat and decided we need to do business differently. Can we start also managing funds and discretionary fund management of investor funds that are given to us, so that we can actually do the job of helping investors make the right calls in markets? Because we have an advantage based on our experience, and also because we have what you call an order flow exposure. So we're able to know maybe the stocks that are best suited for you. But we took it one notch higher to then expose investors to actual investment classes that do not necessarily only exist in the Kenyan space. So what the value proposition for SIB therefore would be that when you enter SIB, you can do the very things any other investment bank can give you, because any other investment bank can do the same thing. They can offer you stock brokerage services. They can offer you access to corporate finance businesses, what you call balance sheet optimization, IPO listing, mergers and acquisitions. They can give you all that. But we decided to take it a notch higher by now allowing retail investors to actually come and not have to do anything other than just invest with us, and we do the rest of the work, that is investing in various asset classes on their behalf. And that's our biggest value proposition, the fact that we became an all-rounded financial advisor, so to speak.
What are some of the other products that you have?
Let me just first of all explain that an investment bank, even from a regulatory perspective, has to have a sell side and a buy side of the business. The sell side of the business is where we receive orders to buy and sell financial instruments on behalf of investors, essentially what I referred to earlier as the stock brokerage side of it. So investors can come and open accounts to buy and sell shares on the NSE. So that's the first thing they can do. The second thing is they can come to us to buy and sell fixed income assets. So you can buy Kenyan Treasury bonds with us, Kenyan Treasury bills, corporate bonds that are available for listing, or even the ones that are trading over the counter. And also, very recently, we allow our investors to also buy and sell Euro bonds. All the Euro bonds that are listed typically from the African on the African continent. And then now the other thing is now on the buy side of the business, now we have discretionary funds. The main one is Mansa-X, and I think we'll be delving into that shortly with more detail. And then other funds that allow you to do money markets. So typically a money market fund would really be exposing you to short-term interest rate instruments, and equity funds, which would typically be exposing you to NSE locally denominated equities.
What exactly does Mansa-X entail, and maybe a brief history that led to its formation?
Mansa-X is a product that we're very proud of because when we started this product, it was actually client-driven. We started this product because clients actually asked us to create something that would allow them to navigate the bears and bullish seasons in the local markets. The local markets at the time were really just the local stock markets, local fixed income markets, which again were not really accessible to investors with anything less than 100,000 shillings, for example. And then maybe just real estate. For a very long time, investors could only invest in those three asset classes. And a lot of our investors were concerned because when these asset classes were not doing very well, then they had to tolerate bearish periods. And we had a really tough time in capital markets. And I'm sure, Mokaya, you know this, that for over 10 years, we didn't even have a listing on the NSE. So if we didn't have a listing on the NSE, there was nothing to really infect the markets with any enthusiasm to trade local assets. It didn't help that the global financial crisis also created a very, very difficult environment for capital markets outside the United States, especially because even as the financial crisis was solved by capital injection by the Federal Reserve post 2008, a lot of this did not really, it did not actually create value for frontier markets such as ourselves. So it's around that period, about 8 years later, in 2016, that we started asking ourselves, why is it that Kenyan investors, a typical Kenyan, has exposure to a lot of things globally. A Kenyan investor wakes up, he can access Uber to go to the office, can order food online, he can go home and watch a movie on Netflix. But for some reason, when he goes to his financial advisor, the only investment assets he can be accessible to are really just 1 or 3 stocks on the stock exchange in Kenya, and maybe buying a plot somewhere outside the reach of Nairobi. some sort of speculatory investment. So we asked ourselves, why don't we then create a platform where investors can have access to financial instruments that are not necessarily domiciled in the Kenyan space? And that's how Mansa-X was born. Why we named it Mansa-X? We named it after Mansa Musa. Mansa Musa was and still remains the richest man who ever lived, and he was actually from the kingdom of Mali in West Africa. And it said that when he was going for his Islamic Hajj, he had so much gold that he actually donated along the way, that he caused a depreciation in the price of gold for 10 years. So the reason why we named this fund Mansa, therefore, was really to allude to the fact that you can actually create a Kenyan fund that is, naturally Kenyan, therefore locally domiciled, but with global exposure, and still create prosperity for Kenyan Kenyan investors with that angle. So a Kenyan investor who doesn't know anything about a stock like Raytheon, for example, can actually be able to invest in this fund and still get a return from the stock price movement in a stock that's traded thousands of miles away on the New York Stock Exchange. Now we did this we got our license at the tail end of 2018 from the Capital Markets Authority. And since then, we've grown the fund for the last 6 years, and we are happy to see that our investors have actually believed in our dream, and they have been very well rewarded for that period. Well, we started at if you can say so, we started at zero because we started with our own proprietary capital at the time, and we really had to run with the fact that this was a concept that we were fairly certain would make sense to investors, and for that period we have grown to manage. Now we're managing over 30 billion shillings under the Mansa-X funds, and we have grown to have a client base of about 17,000 clients. We are regulated and continue to be supervised by the Capital Markets Authority. They're the ones who gave us a license. And Capital Markets Authority, first of all, they give us, they're already the ones that license us to be an investment bank. So our investment banking license comes from the Capital Markets Authority. But the license to also run Mansa-X comes from the CMA. We started as what you'd call a money manager. So we started as a money manager. That's what the license was. That was at the tail end of 2018. But now we are now categorized as what you call a special fund by the CMA, meaning that for all intents and purposes, we then operate as what you call a collective investment scheme, but within certain defined rules that are unique to funds such as Mansa-X. And very recently, Mansa-X was also licensed by the Retirement Benefits Authority to actually also invest funds on behalf of retirees and pensioners. Again, this is something that we are very proud of because we are also trying to push the idea that pensioners are also deserving of a higher than average return than what they have been exposed to for a very long time in capital markets in Kenya.
And then you have two funds, the USD and the KES. Give a brief breakdown on each fund.
Yes, the Kenya Shilling Fund. Actually, when we started the fund, it was something that we grappled with. Should we make it a Kenya Shilling Fund or a USD fund? But we settled on the Kenya Shilling Fund because at the time that was easier for investors locally to understand, and the average return for the Kenya Shilling Fund for the last 5 years has been about 17.6%. But at the tail end of 2022, we also started the dollar fund. A lot of this came because of a lot of our clients. Again, we tend to be very client-driven and client-centric at SIB, where our clients were very concerned about, they had anxieties around a depreciation of their wealth because of the Kenya shilling losing value against the dollar. So that's when we started the dollar fund, and we have been able to average above 12% for the dollar fund since inception. So all these returns, we feel are returns that have given a return above, fairly reasonable above the average return in the market, proving the concept that exposure to asset classes outside the local ones without increasing disproportionate risk will always give a better return than what clients were exposed to for a very long time.
On Mansa-X itself, what kind of investors would be best suited to invest in that fund? And what's the minimum investment required, maybe to participate in either the KES or the USD fund?
I'd say any investor who's looking to genuinely diversify their portfolio, because one of the things that we worry about as investment bankers, or one of the things that we see that make us very uncomfortable, is seeing investors not necessarily being very well diversified. So if the stock market is doing very well, we see investors tend to then put all their eggs in one basket and go into the stock market. Even if they diversify by buying different stocks, they're still exposed, say, to one stock exchange. If they're looking to avoid exposure to the stock market, they go and they buy bonds, again exposed to one sovereign debt and so on. So in Mansa-X, we created a fund that creates genuine diversification. If I could just explain, we have different asset classes that Mansa-X actually invests in. The first one is equities, meaning we buy shares in companies from around the world. Then we have stock indices, meaning stock indices like the FTSE and the German DAX, the Japanese Nikkei, meaning lumped up stocks, and then we can actually buy the index in itself for investors, again exposing investors to those different markets. We also buy and sell commodities on behalf of investors, so like natural gas, oil, and also soft commodities. In fact, very recently, even commodities like coffee and cocoa. We also have exposure to precious metals like gold and silver, and then ETF, exchange traded funds, again with exposure to asset classes from around the world. So the kind of investor who comes into Mansa-X is a kind of investor who's looking to genuinely diversify their portfolio. And again, if you look at the kind of investors we've had investors who are typically aspirational. They're very well exposed to what's going on in the world. An investor who, like for example, right now we're on Twitter, now known as X. And this is, for example, is an investor who knows that this company exists. So why should we not allow an investor like that to be in a fund that can actually buy a stock in Twitter, for example? So those are the kind of investors that we have. And we dare say Kenyans, most Kenyans tend to fit that profile. In fact, the only Kenyans we had actually not created a product for a very long time were really the Muslim clients. And therefore, last year, we actually created Sharia versions of Mansa-X. So now we have a Sharia version of Mansa-X Kenya Shilling Fund, which we call a Mansa-X Kenya Shilling Fund. And then we also have the Mansa-X Dollar Sharia Fund. And again, this is really to show you that we have a lot of demand from all walks of life in Kenya for this product. Now, there's a great misunderstanding amongst the investing public that Mansa-X is actually has a higher risk than your average fund, and we always argue that it's actually the other way around. If you're investing in a wider array of asset classes, you tend to have a likelier chance of having a higher return without actually creating the disproportionate downside risk. And like most of the other funds that typically would only have one or two asset classes that are domiciled locally. If you look at most funds in Kenya right now, almost all of them are biased towards investing in Kenyan government bonds. And we are the only one of the few funds, I believe, I'd say maybe the only one, that actually exposes investors to all manner of asset classes, therefore removing the over-reliance on one asset class. So an investor who's looking to genuinely diversify their portfolio with a reasonable return, Mansa-X is definitely the place they should be looking at.
In terms of investing, then how does the funds flow from the investor to you, then to investing?
So there are very many ways they can reach out to us. They can reach out to us online. We have a website that allows and allows them to actually interact with financial advisors. They can also call directly to the office, and we'll have our financial advisors guide them through the process, which is fairly simple. We have custody banks that we work with. Our main custodial bank is I&M Bank. So they will transfer funds from their bank account to I&M Bank. And then from I&M Bank, then we will then access those funds for purposes of trading. Withdrawing funds is also exactly the same. They will then reach out to us for withdrawal of funds, and we will then send the funds directly from our custody account at I&M Bank back to their account. And this is a fairly quick process. Typically, it doesn't take more than 48 hours. In fact, it's really dependent on the bank that they bank with, because our custodian is pretty fast. And I think I&M is one of the partners that we've worked with that has done an excellent job. The reason why we work with custodians is also for safety of client funds. From a regulatory perspective, custodians, typically the funds that they hold are not subject to the balance sheet of the bank. So they are really protected from anything that happens to the bank from a regulatory perspective. And this is one of the reasons we work with custodial banks. Very recently, one of the things that we've had to change about the funds is now including trustees. Trustees now work with Mansa-X to protect the interests of the clients, and this was really a regulatory reason because of how quickly and how big the fund has grown. The regulator insists that we must have trustees to really take care of the investor interest, and that's one of the things. Again, we are very proud to be one of the first funds of our nature to quickly comply with the CMA on this request. So that's how an investor would join the fund. Withdraw funds very easy. Every investor who joins SIB to invest in the Mansa-X fund will always get a financial advisor, and that financial advisor becomes their go-to person for either top-ups into their accounts or withdrawals from their account.
Maybe you need to emphasize this in terms of liquidity of the fund. What stops SIB from keeping my money, and how fast can I get my money? I think that's a real worry which we need to speak to.
I really like that we're having that conversation. One of the things that I have always mentioned to investors is a big concern for me personally when I started running this fund was a lot of investors in Kenya only ever talk about returns, and nobody ever talks about liquidity. Nobody ever talks about how quickly can I access my funds. So at Mansa-X, the reason we invest in liquid assets, that's why we invest in stocks, we invest in bonds, we invest in metals, commodities, and we invest in this with brokerages around the world, is exactly to solve that issue. We will actually often give up return for the sake of liquidity. So liquidity is very important in Mansa-X, and I dare say we are a very, very liquid fund, if not one of the most liquid funds in Kenya. We are actually able to pay investors as and when they request for their funds. So this is actually something that we actually specifically designed so that investors will never have to say, okay, I had a very good return, but I couldn't access my funds. That's one big worry we had. That's why even when we started the fund, we really bypassed assets. For example, we actually bypassed assets, like heavy investments in real estate that would actually jeopardize our liquidity position.
But I wanted to maybe quickly give you a bit of time to explain the returns on the various funds and how they've been the past couple of years. Of course, past returns don't guarantee future returns. That's very important. But it's good to give a history of how the fund has been performing so far.
I mean, last quarter was one of the best ones. We had a very good quarter at the beginning of this year, where our annualized Q1 return was actually 22.48 after fees for the Kenya shilling fund, and 13.92 for the dollar fund. Last year, our Kenya shilling fund returned 18.01% after fees and 12.1% after fees for the dollar fund. Our top 10 holdings for the Mansa-X fund last year, actually for last quarter, was really a Eurobond. So, and I forgot to mention Eurobonds. We've had clients asking us why we have holdings in Eurobonds that seem quite significant. We actually reduced them by over 20% the last quarter. That's because we and I had mentioned this last year, if you, because we do a lot of YouTube videos, and I'd advise a lot of our listeners today, whether existing or potential investors, to actually visit our YouTube videos and watch. One of the things I had actually mentioned was we actually felt a lot of Euro bonds, especially the Kenyan ones, were grossly undervalued. Some of the bonds, Euro bonds we bought last year had yields in excess of 20%, and we were able to exit those positions at closer to 10%. You can imagine, Mokaya. So those were asset classes that we felt had been really ignored. So our top 10 holdings, we had Euro bonds, we had crude oil, we had exposure to Microsoft. We're in the S&P 500. Significant positions also in gold, Nvidia, Novo Nordisk. Pharmaceutical companies have always done very well for us over the years, and I think I mentioned this a few times during our talks. Stocks like Novo Nordisk, Moderna, Eli Lilly, especially for Novo Nordisk, with a drug like Ozempic, it's really sent the stock rallying, and we've really taken advantage of that. We saw commodities like cocoa, for example, in the first quarter of this year. Cocoa actually accelerated by over 130% in value, which is quite significant. So you can imagine those kind of moves in markets have really helped the fund to make a return. On average now, looking back now over the last 5 years, our average return is close to 18% after fees. And I know a lot of people will say, well, I can get the same return by buying a Kenyan infrastructure bond. Well, what you don't get when you buy an infrastructure bond is the fact that if Mansa-X allows you to have a return of 18%, it's the same 18% if you needed to withdraw tomorrow morning. But with an infrastructure bond, if it's floated at a coupon of say 18%, then when you're trying to sell it, you'd have to be subject to market forces. And typically, if you're not a big investor, that will quickly drop easily to even as low as 16-15%. And that's the difference with Mansa-X. So it's very important for investors to know that when they compare to bonds like IFBs, those bonds are only giving you that return, what we call yield in the market, if you hold them for those 10, 15, 20 years. And that's a big difference.
You spoke about fees, so it's good to speak about how much in terms of percentage of fees that you charge.
Okay. I mean, this is something we've had to deal with from the beginning. And Mokaya, you can imagine we've had this question about fees even before we had a return. Okay. So we charge this fee purely because of how administratively involving it is to run a fund like this. First, from the type of traders that you have to hire, they have to be very proficient traders at their craft. And of course, that comes at a very heavy cost. The number of brokerages that we have to work with, we have brokerages locally, we have brokerages in New York, London, Dubai, Madrid. We have brokerages everywhere, and this comes at a very significant cost. The systems that we have to implement, all this again creates a fund that, yes, is expensive to run, but fortunately that expense has been able over time to be proven to still squeeze a return, even with those fees that might look higher, still give a return better than fund managers who might charge less than we do, but still give you a lower return.
You can tell people a bit about how you do risk management and then how long your holding period is for some of the assets that you're trading in.
Okay, so risk management, of course, the overall risk management framework is really just governed by being within a regulatory space. So having your CMA as your regulator constantly inspecting the fund as they do, that by itself is already a risk management tool. And I think that's one of the most powerful ones. Then, of course, Mansa-X is domiciled within an investment bank that's very well governed from a corporate governance perspective. You have a very strong board of directors, and then under that board of directors you have various committees that oversee the running of the fund. So you have the investment committee, you have the compliance committee, you have the risk committees, and then after that then you have a portfolio manager like myself. That's my daily job, who I then have to manage a team of dealers. And within this team of dealers, you then have limits as to what they can trade and not trade, and the risks that they can take. And a lot of these are automated. In fact, our risk management system really automates what you call our stop loss levels, meaning that, for example, even if you bought a certain stock and as a trader you felt, no, I can hold it for longer because I think it will turn, the system will automatically stop it for you. So we have very automated methods of risk management. Again, a lot of these are not very unique to the fund. If you look at funds globally, they've used the same techniques for risk management, and we were really one of the first funds locally to really implement them in the way that we have. So we are very confident about our risk management. Something that I worried about, especially when we started Mansa-X, but now I would confidently say that the fund has more than enough capacity to hold its own, whether or not Nahashon is present or not. We have very capable team working there, whether it's on the trading division, whether it's in terms of client management, whether it's from a compliance perspective, whether it's a board of directors, whether it's an investment committee. The fund is large enough to hold its own, and therefore not necessarily dependent on Nahashon.
Does each deposit have to stay in for 6 months? So once they put money in, do you have a period within which you can you have to restrict maybe people to investing in the fund?
Yes, that's called a lock-in period, and the reason we have a lock-in period is because we actually have a fund. Our fund is fairly liquid to allow investors to really withdraw at any time, but we find that a lot of investors would then lose a lot of value if they invest and then withdraw their funds far too quickly. But one of the things that we have actually never implemented is a penalty for withdrawal of funds. Okay, so we've had investors who withdrawn prior to 6 months. We don't have a penalty. The only thing we now decided is we will not then pay a return for that period, because the fund has become fairly large. And if you then don't apply some sort of something that stops them from withdrawing before the 6 months are over, you can create some sort of liquidity issue within the fund. So that's the only thing. However, we are very, very open to talking to investors if they need to withdraw their funds for any sort of emergency. Again, like I mentioned, every investor gets a financial advisor who they can speak to, and we're able to deal with this from a case-to-case basis. What I'm saying, Mokaya, is if you're trying to withdraw your funds because you have an emergency at home, you will not meet a stone-faced person at SIB telling you that we will not pay you anything because you needed your funds. We are very open and we deal on a case-by-case basis.
Other products charge like 220. Is 5% purely management, or do you also charge on returns?
The 5%, of course, is on the assets under management. So if you invested $1 million with us and now next year your funds at 1.2 million, yes, so the 5% is on the 1.2 million. So yes, you'd say 5% is on the entire assets that now belong to you. Yes, we've had clients asking us about the 220 rule. Most hedge funds on Wall Street and around the world will charge that way. Our model was really just to charge 5% because if you did the math for 220, you'll find that we charge less. If we charged our investors 2% of the funds that you invest with us and 20% of the returns that we generate for you, over time, you'll find that we'll actually make more. So we just chose to just make it simple for our investors. Again, a big part of the reason why we ran it like that is really what we were faced with in the local dynamic, and we had to work with the local dynamic as it were. We did not want to create a very complex fee management system that will become very difficult for potential investors to understand.
There's a promise of more transparent reporting. He says the nature of the report does not show the layering of gains from quarter to quarter. So I think someone wants a bit more information in terms of how the gains were gotten during a particular quarter. Does that feels too proprietary, or is that something that you can promise? And then also in that regard, also maybe there's something I've been asking also for in terms of risk metrics. Is this something that you have in mind to release to investors soon?
Even our fact sheet has slowly evolved over time to deal with concerns from investors. If you look at our fact sheet, our top 10 holdings, initially we never even used to say what percentage of the fund those assets constituted. So what we're trying to do is always just listen to our clients. If it's reasonable, we will provide it. So we started providing our top 10 holdings, and we started giving a percentage of exposure of that particular asset into the fund. In terms of what that asset created as a return to the fund, that can quickly get very technical, Mokaya, and I'm not very sure a lot of investors would even want that. However, this is something that if that particular investor wanted, they can reach out, and that's information. If it does not impede on our own proprietary passions, then we can give them that.
Compounding effect to returns. So maybe you can speak to that. Like if they invest now and then the returns at the end of the year, you do reinvest them back, right?
The thing with Mansa is that ideally, every day is sort of, in a sense, a compounding effect, or either positive or negative. Let me explain. If I started with $1 million today, and for the next 2 days, I gain 200,000, and then the next 3 days, I then gain, I then lose 100,000. So if day one, the fund had earned a profit of 100,000, then day two, you'd still be earning a return on the same 100,000 that you earned the previous day. But also, if there was a loss of that amount the previous day, then you'll be working with less capital, because this is not a market guaranteed fund. That's why we like to expand the outlook of returns to a longer period. One of the challenges that we face with our Kenyan investors, they've been more exposed to straight line returns, where a lot of fund managers will typically invest in interest products. So if somebody invests in a bond that returns 15% in a year, then it's very easy to say 15% divided by 365, and therefore I compound that every year. But this is a fund that typically will give you a return of an actual gain over a certain period of time, and this gain can be plus or minus a certain amount. And that's why even for investors, it's the same reason why we really discourage very rapid withdrawal of funds unnecessarily, unless of course you have an emergency, because then what happens is investors keep subjecting themselves to the cycles of market forces. So when it comes to compounding, that's a question that it gets very mathematical very quickly. But if you look at it, yes, from a yearly perspective, it's an easier question to answer. That yes, if we finish a year at 18% and you start the new year with an 18% return, then of course, then the next year it compounds. It compounds on that naturally, because essentially we invested your principal plus return in the second year. But if you then bring it down to a daily basis, it gets a lot more complex.
And he wants you to break it down for him. He gives you 1 million shillings today. In 1 year, in terms of returns, how much, given the history, like how much do you return in a year?
Well, so last year, if he had given us 1 million 1st of January, 31st of January, he'd have earned 180,000 and 10,000 shillings after fees.
In terms of risk, what's the risk that you lose your capital?
When it comes to risk to capital, be very careful with a fund manager who says that there's no risk. Anytime you engage in capital markets, just like any other business, be very careful with anyone who tells you that there's no chance you can lose anything. But one of the things you can do is check their historical performance. So Mansa-X has been in existence now in our 6th year, and we have never lost a client's capital. So we have proven the concept that if you're well diversified, if you're constantly buying assets that are not correlated with each other in terms of market movements, then you're more likely to get a return without ever having to lose any of your capital. And we've proven that for 6 years. So I cannot answer that in a forward way, but I can only answer it based on how we've been able to perform for the last 6 years. We're fairly confident to invest with an investor who has been able to demonstrate the capacity to give me a return consistently for 6 years without denting my capital. Our fact sheet will show you that some quarters are better than others, and others, underperform other quarters. That is exactly how our market operates. And I think our fact sheet is a really fair representation of how dynamic markets can be in terms of ability to give a return or not. If we had a fairly consistent straight line, I think we'd have to be the luckiest people out there.
Someone is asking here about daily real-time flow of returns.
When we started, when we started Mansa, that was one of the things that we really grappled with. Some investors want, can I get a daily report of how much my fund is making? If you did that, I guarantee you, even the investors who ask us that, if we give them a real-time view of their account, they would have sleepless nights. It's a very tough job. And that's why you pay us 5% to handle that pressure. And that's why we came to a compromise and said, okay, fine, we will not give you yearly statements, we'll give you quarterly statements. At least then you wait only 3 months to get an idea of how your account is performing. And we feel that's a very good trade-off for those investors who are fairly anxious about whether their returns are okay, and the ones who have a longer term view. We found that a quarterly return was a good trade-off. A daily one would just be far too much for anybody. At least most of the people that we've ever engaged with.
There's a frequent mention of something called Forefront. So maybe you can describe how that's different from Mansa-X. I understand it's a product within SIB. So maybe you can speak to that a bit.
So Forefront is one of the subsidiaries of SIB. Forefront is what we call a robo-advisor. So we pioneered a product that allows essentially algorithms. It's like artificial intelligence, really, that then picks out an investor's risk appetites and horizons and so on, and then suggests an investment for them. So think of it as financial advisors who are robots. That's what Forefront is, and it's our wealth management arm, and can suggest various investments for you based on the profiling that they have for you. And that's what Forefront really is.
So basically a robo-advisor. So I think it's in the interest of leveraging technology to make sure that you deliver good investments to people. So I think it's very, very important for people to understand that robo-advisor. But there's no robo-advisor at Mansa-X. It's you making decisions, right?
Yeah, with Mansa-X, you have the advantage of speaking to an actual human financial advisor who will advise you, and then you can then check whether that investment makes sense for you or not. Or does it? You can have $1 million shillings, and maybe 250,000 would be suitable for Mansa. Can we put 300 in this and so on? That is why we are also one of the few fund managers that has really pushed for financial advisors to be certified with the Chartered Institute of Securities and Investments, CC, so that they are not just salespeople to you, and they are also financial advisors, and they actually genuinely advise you on whether investing in certain assets is safe or proper for you or not. And that's one of the things that we also really encourage, is that listen to your financial advisor. That's very important. And we have hired a lot of them to make sure our investors are well covered.
Someone is asking if you have competitors in the region, and how did you set the hurdle rates?
We do not have a competitor in the region, not in the way that we run this fund. And we set our hurdle rates. I'll be honest with you, we were probably a lot more ambitious when we started in terms of returns, because we were much smaller then, and we were really comparing ourselves to a lot of hedge funds globally. But the local dynamics also made us realize that one of the things, and that's one of the realizations we came to have in Kenya, is that I think you can actually categorize most Kenyan investors as conservative investors. So we had set the hurdle rate much higher at 25% for the Kenya shilling fund, at 15% for the dollar fund. But over time, we have some investors who've received those kind of returns, but we feel that right now we like to think of most of our investors as conservative investors, and that's why, again, when I answer the question on the 220 performance fee management structure, I mentioned that we really had to look for something that's a trade-off between something that makes sense as a business running this kind of a fund and a trade-off of how investors in Kenya actually understands and perceive investments to be like, and what actually works within a dynamic that they already understand.
What are some of the taxes applicable to Mansa-X as someone invests in them? So someone to keep in mind, maybe top of mind, quick taxes and maybe fees that someone. Are there other hidden fees someone may also be surprised by at some point? So I think that's important. So someone is asking, you compare that maybe to MMS, which have some withholding tax implications.
First of all, we already pay the taxman VAT on our fees. Already we pay 16% on our fee management, which is 5%. So we pay another 0.8% as taxes, which is already quite significant. This actually goes to reduce your return as an investor. So your return is actually lower by 0.8% because of the VAT that we pay. Then within the fund that we already pay withholding taxes for any asset classes that we buy or sell that are subject to withholding tax. So that's it's fixed income products or fixed deposit products, or it's share dividends and so on. We already pay those taxes on your behalf. Now, the return you actually receive as an investor has already had all those taxes subjected to them. Now, our fund is actually not a guaranteed return investment, and that's why it's not subject to withholding tax. You see, when you compare with an MMS, if they are buying a bond, for example, or they are investing in fixed deposit, then typically you are already expecting 10% at the end of the year, so the government will tax you 15% of that. But in Mansa-X, you are subjecting yourself to market dynamics, and the return you actually make would most closely be referred to as a capital gain. And we don't have capital gains taxes in Kenya for capital markets products. In addition, with our new CIS accreditation that we are the tail end of concluding, we are then also not subject to certain taxes, and this will accrue as a benefit to investors. But of course, nowadays taxes become such a sensitive topic that we are very careful to answer that question without adding a disclaimer that please check with your tax advisor to make sure that you're well covered in case the taxman comes for you. I mean, thank you, Mokaya. You engage very well, and I really appreciate it. And I'm really appreciative of the clients who've actually put in the time to listen to us this evening. You can find us on JKUA Towers. Now, JKUA Towers is the original ICA building. We're on Kenyatta Avenue on 16th floor. So you can come there and just ask for Mansa-X, information on Mansa-X. You'll be assigned a financial advisor very quickly who will guide you on how to the next steps in terms of opening an account. Our email is clientservices@sib.co.ke. Shoot an email there immediately if you have any question that you feel I did not answer this evening, and we'll get back to you as quickly as possible. Our website is mansa.sib.co.ke. You'll also get a lot more information there, mansa.sib.co.ke. And any question that you have and you feel that you'd want a response as quickly as possible, shoot again to clientservices@sib.co.ke. We will personally respond to you within a few hours.